Joining me now for a closer look at what's playing itself out in that market scene is Makwe Masilela from Makwe Fund Managers. Makwe, a pleasure and a good afternoon to you.
Afternoon to you and to the viewers.
All right, Makwe, quite a bit maybe happening today. Maybe we can also just look at the overall performance. More green screens than we are seeing red screens. But I think the Rand has lost some of its gains. Just keen to get your thoughts on what we're contending with this afternoon.
I think the rand is a function of the menace that we received last night of the Fed, because the guys stated that it's very clear from their side, the guys are not in a rush to start decreasing interest rates, telling us these interest rates will stay higher for longer, and then hence that managed to boost the dollar itself, and unfortunately the likes of the rand had to suffer from that. But generally, as much as we do approach, our elections, I think there is this thing starting to prevail that most guys will be more comfortable with policy continuity, and then that is why maybe we see what has been happening with our markets now lately, including the rand itself. But generally, market sentiments continues to be driven by central bankers all over the world, that when we start getting data, hoping that we might start seeing some interest rate cuts, because the latest data started to reignite or reinforce those expectations that probably September is possible. With the European Central Bank, we still expect June, but with that sticky inflation coming out of the UK, we start to think that, hey, that might force them to kick the can further down the road. And also back home here, our inflation, it did dip a little bit yesterday, but yes, probably it's not that sufficient to be able to push our Reserve Bank. But the point here is, should other guys start decreasing and our inflation continue to behave with the rand strengthening, then it's only reasonable for us to also start to expect an interest rate decrease. And those results that you mentioned from Nvidia themselves continue to boost the market sentiment. And by the way, that company market cap, is far more than the whole JSE market cap. JSE market cap in dollar terms are talking almost 1.6 trillion US dollars. Those guys are sitting at almost 2.5 trillion.
Let's talk about NVIDIA as well, because not only did NVIDIA see a rally after it beat market expectations, but all the companies linked to it. I saw TSMC, also some Asian stocks, which are either suppliers of NVIDIA or are closely linked to the company, also causing a rally market. What it does tell me is that if NVIDIA is too expensive for any investor, you may look at these other guys because it's all mapping each other out.
Definitely. And the question here is, AI is proceeding, and here it is, it shows you that demand is out there. And the guys are stating very clearly that the demand for their chips, there's very high demand, semiconductor chips. So one cannot ignore that thing. But for them as well, to agree to come with a share split of 10-for-1, that also is helping out to say, hey, instead of paying $3,000 for one share, then definitely we'll split that and be able to pay 300 Rand per share. So that will help as well for guys who want to participate in that. But if you ask about the valuation itself, I think that valuation is very rich, and the guys definitely, they are priced for perfection. As a result, they have to continue to give us this kind of earnings to be able to justify those rich valuations that they have for now.
Certainly two sides of a coin there being priced for perfection, Makwe. Let's also talk about BHP and Anglos. Of course, yesterday, that before the deadline, I think, or around the deadline, we heard that Anglos had completely rejected the offer. But what they've also done is that they've given BHP another week. And it really does have me wondering, maybe Anglos does want to see this deal, but it looks like BHP is only willing to sweeten the consideration and the pricing amount, and not the overall structure. And I think that might be what Anglo wants to see.
And they stated clearly, Anglo, that listen, if you want us to get rid of the SA asset, that's going to be difficult, complicated. And you are right. This whole thing of just offering shares, pure shares, it says something about the market itself, that these valuations are just too high. So ordinarily, you'll expect the guys to do a combination of shares and cash. And I think Billiton this time for this week, they have to go and find at least 6 or 7 billion US dollars just to sweeten this as part of cash. That will definitely help, because remember, Anglo already have announced how will they start to unlock value for shareholders as well. So it's not like they're sitting down there waiting for Peloton to buy them so that shareholders can realize better money. They're also working on their own strategy.
Very interesting times indeed, Makwe. Let's bring it back home. Let's take a look at maybe at Tsogo. They're out with a set of numbers today. Not the best set of numbers. They say consumer behavior has changed since COVID-19. In my mind, Makwe, what has changed a lot, I think, is looking away from brick and mortar casinos. People are gambling on their phones. It's something I think is a big risk, but it's big business as well.
Definitely, online gambling continues to be critical, and more importantly as well, other than online, there's also the part of sports betting, which is fast growing compared to the other form of gambling. But yes, the guys, their income up only 2%. Unfortunately, operating cost up more, up almost 3%. Also, they continue to have the issues with diesel and load shedding. Continues to affect people, I mean, remember, this is the yearly result, We know that load shedding has just only been contained for the past 56 days, but generally it has been there. And hence, if you look into the adjusted, and I prefer the adjusted headline earnings per share, that down 5%, dividend per share down 30%, and it's not surprising why maybe you have the likes of Sun International trying to buy the likes of Piermont. So there's some form of consolidation that needs to happen in that part of the industry.
Very interesting indeed, Makwe. Before we wrap to stock picks, let's touch on Investec and what we're seeing coming out of here, maybe closing off the banking sector for us in terms of earnings there. What are you seeing, Makwe? What is driving Investec's performance today?
Yes, they've made good money when it comes to the net interest income, but it's unchanged. But look into their operating profit up almost 18%, headline earnings per share up almost, 9%. I think they also benefit because that also managed to increase by 5.5%. But also these guys, they've got very decent clients and they continue to acquire more clients. So that growth is helping. And they're just being honest that, yes, this is good for us for now, but with the possibility of interest rates going down, then definitely that might partially affect or offset that kind of momentum.
Brilliant, Makwe. Thank you for that. Let's go into stock picks now, starting off with counters that your industry peers have also liked.
I'm going for the US retailer Target. I mean, I know the share price is being hammered, but it's actually, David and I don't have a cup of tea or a cup of coffee or a Johnny Blue before the TV. But what he said was very relevant. He said the US is showing signs of slowing down a little bit. And that's exactly what Target said. They said, we've had to cut prices on 5,000 or 10,000 line items because the consumer's under a bit of strain there. But I mean, that's not the reason why I'm buying the share, is that if you get lower interest rates in the US and it comes quicker than anticipated, there'll be quite a strong rebound off what may be a lower base in consumer expenditure. And Target's not expensive.
A good dividend payer. I think if you break down where they are, and understand that things are going to change. Even if we do have the ANC again, I think slowly things are going to get better. Money has to be spent, and they're just well placed. They've just got those kind of businesses that are going to benefit. And what gave me the clue was after the results came out, I looked at the chart, and that's at a 4 or 5 year high. And it's just creeping up all the time. Okay, I can buy that.
Like to go short Pick n Pay at these levels. I don't believe that the restructure plan is all that credible. I don't think that with the Ackermans retaining control of this business, again, they only have 25% of the economic rights, but they retain through a pyramidal share structure, which used to be pyramidal. It's now been changed into a higher voting rights structure. But ultimately, they retain control, and that has ultimately led to sort of management which they approve of coming in. And I don't believe their strategic vision has been good for the business of late. I don't believe other shareholders will either. And now they're looking to other shareholders to help them recapitalize this business. And ultimately, they need to relinquish control and let professional management take over and fix this business. There is certainly value. I just don't see in its current form, with them retaining control of both Pick and Pay and Boxer Post and bundling, that actually being unlocking the value, and putting Pick and Pay on a path to profitability.
All right, keen to get your thoughts on some of those, Makwe, Roynet, Walmart and Pick and Pay.
Yeah, right now I'm not buying the story that much as we know that people will start spending money at some point. But hey, the guys are involved in electronics, serious stuff. I'm saying after struggling as a consumer, we'll try to do as much as you can to try to pay off your debt, to try to build some nest as well. And I think David, as much as he might look into the PE, that PE of 11 is very demanding. And also that dividend yield, it sounds okay when you say 4.9%, but compared to its peers, no, it's nothing, because there are peers that are paying almost 7, others 32 or 3. And Pick and Pay, I agree that the guys, this restructuring thing took forever. And maybe that is why there was that immediate release of the previous CEO to appoint someone to try to fast track. And then bundling of Boxer at some point might help the current shareholders. But as it stands, you compare them with the likes of Shoprite, the guys are not doing that great.
And with that said, Makwe, which counter are you going with?
I'll prefer to stay in cash. This whole thing is just too volatile, and I think the markets have gone too high too fast.
Got you, Makwe. Always a pleasure talking to you. Thank you so much for that. That was your midday markets update with Makwe Masilela from Makwe Fund Managers.